Hello, everybody. So glad to see you all here. Welcome to this exciting online training. This webinar is an educational initiative brought to you by Bursa Malaysia Derivatives Berhad. It is my honor to have one of the most talented speakers, Ms. Chong Ting Ting, to lead this training session for you all. She has trained thousands of students about trading derivatives instruments made available locally by the Bursa Malaysia Stock Exchange. And today we are going to cover the FTSE Bursa Malaysia KLCI futures, which is the short form we call it FKLI. Here we have Ting Ting to lead the training session. So how are you doing, Ting Ting?
Hi, good evening, Casey, and good evening, everyone. Now we are going to start directly for today's session. Today's topic is about introduction to FKLI, which is the most traded derivative products by retail investor, one of the products. And I'm not going to introduce about myself because I believe many of you attended the previous session. So today we are going to continue our session. Now, my name is Ting Ting. The rest I'm going to skip and you can have a look. I currently is a CP speaker for SIDC and Asia Banking School. Now, I need to do a disclaimer is because this webinar session is for education purposes. It's not any buy or sell call. Today's topics, we are going to separate into a few sessions. First session, we will be talking about understanding of FKLI. Session 2, we will be talking about FKLI contract specification. Now, the previous session, we did mention that this contract specification is a jargon for our industry. But as a layman terms, it is like your user manual. I repeat, contract specification is like your user manual. Before you trade any of the futures product, first thing, you take their contract specification and understand it. I will go into details in a later stage. And the third session, we are going to talk about margin calculation. Margin calculation, layman terms called deposit. I repeat, margin calculation, layman terms called deposit. I will show it to you how do you calculate your margin when you trade your FKLI. Session 4, we will be talking about user of futures. That means who are the one is your competitors, or what should we call is your competitors. You need to understand the industry players in trading FKLI. And the last session, we are going to talk about the resources of futures information. Where can you get all information when you are going to start your FKLI? Now, this topic, I assume that majority of you are beginners because we are targeting beginners. That means you know you start your futures trading or you just started about less than half a year. So that will be our target audience. If you already traded in the market for more than 5 years, that might not be the target audience that you are going to attend for this webinar. Now, start with the session 1. What is about this FKLI? We need to do some recap about our session 1, the webinar, previous webinar. Now, what is futures exactly? You need to understand from 5 areas, these 5 areas. First is your definition. Second is the terminologies, meaning those commonly used terms in the industry. The third section will be product available in futures. Fourth will be the underlying market. And the last part will be contract specification. Now, today our focus will be on contract specification, how to dissect the contract specification and how it applies for the remaining trading in futures. These are all the products available. Again, those highlighted or those in star, they are retail traded products. That means majority of the retails, they will be trading these 2 products. One is CPO futures, or what we call it as FCPO, which we will go in details during webinar 3. The second products will be FBM KLCI futures, or what we call it as FKLI. And those, and another one highlighted as new, this is only being launched end of August, which is mini mid 70 index futures, or what we call it as FM70. Now, when you trade FKLI, you need to understand that FKLI is a futures product. Futures is a derivative product. It derives from things. Now, it derived from what? It derived from the underlying. So in this scenario, you can see that your KLCI is your underlying products, and your futures, which is your FKLI, this is your futures product. I repeat, FBM KLCI is your underlying, which every day when you're trading stocks, when people are mentioning market ups for how many points or down for how many points, they are referring to FBM KLCI. And the derivative products, which is the futures, is your FKLI. Now, how to buy and sell, which we already covered in webinar 1, but I'm going to do a short recap before we can continue with today's session. When it is uptrend, you buy. I repeat, when you are expecting the market to be bullish or uptrend, you buy. And when you expect the market to be bearish or downtrend, you start to sell first. I repeat, if you're expecting the market to go higher, you buy. Eventually, when the market go higher, you sell. If you're expecting the market to be a downtrend, you start by selling first. Eventually, when the market start to drop, and you buy back at a lower level. And another thing that every one of us should know is buy low and sell high. Now, how do you buy and close a position? If you start by buying a futures contract, eventually, how do you close it and take your profit? You close it by selling a futures contract. But if you start by selling a futures contract, how do you close it? You buy back at later stage. Now, the diagram or the chart at the bottom show you that when you buy at the lower level, and when you want to close it, you sell. Opposite direction. You just sell it, you close the position. But if you start by selling, meaning that you are expecting the market to go further lower, you start by selling. Eventually, how do you close it? You buy back. Now, just to test you, again, this is whatever we already discussed during webinar 1. If GDP announced is better than expected, do you buy or sell FKLI? Now, I believe majority of you already know the answer, because GDP announced is better than expected, meaning the economy is expected to be doing well. So if the economy is expected to do well, the market is expected to go higher. If the market is expected to go higher, what should you do now? You buy first. So the answer is buy FKLI. Now, how to buy and sell? This is an exact trading platform. It's like your stocks. So your stocks, normally you start by selecting a counters, then you start to buy. Eventually, you go and sell. You close the position, then you make the profit. Now, futures is exactly the same. You just need to select so-called as a counter, but in futures, we call it as a products. Like for example, if you select to buy FKI, you already selected a counter. So when you select the FKI, if you are expecting the market to go higher, you just need to click buy. Eventually, when the market go higher, you sell. Now, at the end of today's session, we will show you a demo, a trading simulation platform. This is owned by Bursa Marketplace. You can do your exercise through the platform. Subsequently, you understand better. So the first half, we will be talking about theory. Second half, we'll show you the demo. So the buying and selling is exactly the same as per your stocks. Now, for example, in this case, if I decided that the market is going to go higher, so what should I do right now? If I expect the market to be an uptrend, I buy first. For example, if I buy one FKI contract at the price of 1670, what do you need to do is, this is the order ticket. You just need to key in buy. Can you see the color is green color, meaning you are buying. The price, you just put it at 1670. Now, the second order ticket shows is, let's say if eventually the market went up to 1690. I repeat, if the market eventually went up to 1690 and you believe that this is the highest level and you decided to close your position, so what you need to do is you sell one FKLI contract at the price of 1690. So can you see this is the order ticket? What you need to do is you just need to click the price 1690 and you click sell button. So eventually you already close your position. So in these particular slides, I just want to reiterate one thing. For example, you believe that the market is going to go higher, you buy your FKLI at the price of 1670. If eventually the market went to 1690, you just need to sell one FKLI at the price of 1690. So technically, you are having a 20 points of profit. And if you can remember, each point is how much? Based on your contract specification, each point for FKLI is worth Ringgit Malaysia 50. So in this case, if you really calculate your profit and loss, it will be 20 points times Ringgit Malaysia 50, you are making 1,000 profit. So this is exactly how it works in the actual market. So for those who are trading stocks right now, this is quite similar to what you are doing in your stocks. Now, how to do your profit and loss calculation? Again, if it is an uptrend, what do? You long. If it is a bearish trend, what do? You short. And please bear in mind, if you buy low and eventually you sell high, or you start by selling high and eventually you buy low, this will entitle you for a profit. But if you do anything opposite of this direction, for example, you buy high and you sell low, or you start by selling low and eventually you buy high, then you will be entitled for a loss. Now, for example, 5th of July, overnight Dow Jones closed higher by 300 points. So you bought one contract at 1670 because you anticipate that our market will follow in tandem. It will be an uptrend. On 6th of August, 6th of July, FKLI is trading at 1690, and you believe that this price already at the highest level, and you decided to take profit. So what do? You just sell one contract at the price of 1690. So in this case, what will be your profit or loss? And if it is a profit, how much? If it is a loss, how much? Maybe you can do a calculation by yourself. I give you maybe 10 seconds to calculate. So for those who already have your answer, you can type in at the chat box as well, or the answer box. Now, for you should understand that this is quite similar to the previous example. So how do you calculate your profit and loss? You take 1690, which is your selling price, minus your 1670, which is your buying price. The difference is 20 points. You times with Ringgit Malaysia 50, because every point is already fixed at Ringgit Malaysia 50. So your total profit will be, I think this is a calculation error. It should be 1,000 profit. Yes, definitely, because there's a 20 points difference times Ringgit Malaysia 50, it will be 1,000 profit.
So Ting, you purposely did this to get our attention, right?
It's at night, right? So to attract your attention in the way. Now, so this is an actual buying and selling platform. So if you're expecting the market to go higher, as per the previous example, so what do? Right now is you key in to buy at the price of 1670. Eventually, if the market went up, reaching 1690, what should you do? You just need to key in to sell at the price of 1690. So the 20 points of difference will be your profit. Now, for example, if 1st of August, you sold one contract at 1,008, let's say you believe that the price will go lower. So you sell first. You sell it at the price of 1,008. On 3rd of August, let's say, for example, if the index already dropped to 1750, so what should you do? You just buy back. So when you start by selling, eventually you bought back. Is a profit or is a loss? And how much? Now you calculate first, then I will let you know in a short while. Now, what is the difference? How many points are different? In this scenario, the difference is 50 points. Now, each point is how much? Each point is Ringgit Malaysia 50. So in this case, the difference will be, you are taking 1,800 minus 1,750. The difference is 50 points. You times Ringgit Malaysia 50. Is it 2,500? I'm not quite sure. Maybe the calculation is wrong. So in this case, the difference is 50 points times Ringgit Malaysia 50. The calculation will be 2,500 and it will be a profit. The reason behind is because you start by selling high and eventually you bought back at a lower level. So you are still making a profit of 2,500. I believe you will find that it's quite simple, right? Futures is not what we thought so difficult. Now, in your trading platform or in your account, trading account, the bottom part, we are trying to show it to you. If your initial capital, let's say, for example, is 4,000. So as per the previous example, you have a realized profit of 2,500. So your initial capital of 4,000 plus 2,500, your balance in your account will be 6,500. Now, when can you withdraw this 6,500? If it is your stock trading, normally you need to wait until T+3, only you can request for withdrawal. But for futures, as per when you sold it, if you decided that you wanted to withdraw your money, you can request to withdraw immediately. I give you an example. Let's say in the morning, I already sold the 2,500 and I realized the profit 2,500. So in my equity or in my account, I have a cash balance of 6,500. I can actually call my dealers immediately and request to withdraw 6,500 immediately. And normally, majority of the brokers, you will get your money by noon. For example, 12 something or 1 o'clock or 2 o'clock. And so majority of the house, if you request before 10 o'clock in the morning, they will process your withdrawal by the day itself. So by noon, you will get your money. So futures profit and loss, you can withdraw at any point in time, unlike your stocks trading. Now, this is the actual trading platform. Can you see the profit and loss calculation? Now, this is exactly the profit and loss calculation. Now, a trading platform is very advanced. You don't need to calculate your profit and loss by yourself. Even majority of the trading platform, you don't need to click the refresh button. You can, the system will auto calculate. When the market moves by 1 point, they will auto calculate your profit and loss. Can you see the first line is the cash balance of 15,000 plus. If the client's having a realized profit of, let's say, 950, so the current balance is 16,000. And then minus off your unrealized, meaning those positions that you not yet closed, you have a cash balance of 16,500 plus. And the bottom part will show exactly what kind of position that you are currently having. So it's very clear cut. I believe majority of the stocks trading platform, they do have these, but many of it is just that you need to refresh, you need to click the refresh button. But futures, they are more advanced. You don't need to click the refresh button. They will auto calculate and mark to market as per the last traded price. Now come to the second session about FKLI contract specification. Now many of you will find that contract specification is like a jargon to you. I repeat, as a layman terms, this is like your user manual. You imagine if today you bought one iPhone, first thing what do if you do not know how to use? Now you look at the user manual. You start to understand what is the spec of the iPhone, etc. What are the functions available for you? Now, when it comes to futures trading, contract specification is like a user manual. Before you trade any futures products, first thing, you take the contract spec and start to read. In our industry, we call it as contract specification, or short form, we call it as contract specs. Now, today we are going to dissect FKLI contract specification. When it comes to webinar 3, we are going to talk about FCPO contract specification. Now, another example for you is for those who own a house. Before you own a house, first thing, you need to sign an agreement. This agreement is a sales and purchase agreement. They'll define how big is your house, where's the location, blah, blah, blah. So this contract specification is exactly similar to your futures. Where do you get your contract specification? First, you go to bursamalaysia.com, then you click on derivative, and you click on products. I repeat, you go to bursamalaysia.com, you click on derivative, you click on products. Like for example, today we are going to talk about FKLI. It will be fall under the equity derivative. So once you click on the product equity derivative, they will show you the contract specification. Now, this is exactly the contract specification. Don't worry, it's unlike your S&P, which is so thick. Our contract specification for all the futures contract is only 1 page. The most is 2 pages, but those are irrelevant to retail traders. For example, FCPO is about 2 A4 size pages. And when it comes to the next webinar, I will show it to you. Majority of it is towards physical player, but if you are a retail trader, it's nothing to do with you. Those information relevant to you is about 1 A4 size. Now, we are going to go through line by line about this contract specification so that you can understand. For example, for this FKLI, the underlying instrument is your FBM KLCI. As per the previous slides that I showed to you, every day when you trade your stocks, you refer to this FBM KLCI. So for FKLI, the underlying is FBM KLCI. So in this case, FKLI is like us, FBM KLCI is like your parents. So how FBM KLCI move, we will more or less follow in tandem. I repeat, how FBM KLCI move, FKI more or less will follow in tandem because they derive from the underlying products, which is the FBM KLCI. The second line is the contract size. They already mentioned to you the contract size is every FKLI, every FBM KLCI points, it multiplies by Ringgit Malaysia 50. This already standard. That means it is being standardized by Bursa Malaysia Derivatives. So they already fix it at every point as Ringgit Malaysia 50. Now, many of you will start to ask me, why it is 50? Can it be Ringgit Malaysia 10 or not? But when they design this contract specification, they already fix it at Ringgit Malaysia 50. Now, as a layman explanation, it's like, let's say, for example, those who are staying in KL, if you're staying at KL City Center, maybe per square feet is like the property in KL City Center per square feet, maybe they are selling at Ringgit Malaysia 1,500. But if you're staying slightly outskirt, for example, anything, let's say in Seremban, or anything out of KL city centers, maybe per square feet, they are only selling at Ringgit Malaysia 500. So these all are fixed by demand and supply. So when Bursa Malaysia Derivatives, when they wanted to fix it at Ringgit Malaysia 50, there's a reason behind as well. So currently, every contract size is your KLCI multiplied by Ringgit Malaysia 50. And the third line is minimum price fluctuation is 0.5 points, meaning that every time when the market start to move, every time when it moves by 0.5 points. For example, if your KLCI, your FKI is trading at 1,007, the next price will be at 1700.5, and followed by 1701, and followed by 1701.5. It cannot be 1700.1 or 1700.2. This daily price limit is like what you're trading in your stocks, which is limit up and limit down. Now, I'm not going to go in details, but you can read. So far, for example, for the past 10 years, we never have a price limit down or limit up. That's very close to it. It happens in the year of 2008, when our market having a gap down, gap opening, and subsequently it triggered our circuit breakers for our KLCI. But today I do not have time to explain about these circuit breakers. But what you need to know is so far for FKI, we never experienced any limit down or limit up. Number 5, on the 5th line is the contract months. Contract months meaning that the months that you can trade. I repeat, this contract months is the months that is available for you to trade. So if you dissect this contract specification, they are telling you the months that you can trade is spot month, the next month, the next 2 calendar quarterly months. Quarterly months are March, June, September, and December. So let me show it to you. For example, this month we are, for example, I'll give you an example that I screenshot previous on 8th of October. Now, if today is 8th of October, your spot month will be October, and the next month will be November. Follow 2 quarter month will be December and March. Now, what do you mean by that? This is the exact screenshot that I screened it during 8th of October. When the market closed on 8th of October, I actually screenshot these slides. Now, can you see that these are the months available? The months available are FKLI October, FKLI November, FKLI December, and FKLI March next year. So these are the 4 months that you can trade. Now, which month, if you are a retail investor or retail trader, which month should you trade? I give you 1 second or 10 seconds to think about it. If you are a retail investor or retail traders, which month should you trade? And try to think why. If you decided to trade October, why? Now, I believe majority of you do have the answer, and some of you already typed into the chat box. Now, when you wanted to trade, which month should you trade? As a retail investor, normally you trade October. Yes, exactly. Some of you already typed in October. Normally, as a retail investor, you trade October. One of the reasons is because the volume is the highest. I repeat, majority of the retail investor, you will be looking at the spot month, which is October. One of the reasons is because it is the highest traded months. And when the volume is high, meaning the liquidity is high as well. So when you buy and sell, it's easy for you to get out from the market. I repeat, normally as a retail investor, you would be trading spot month. Spot month is the October month. The reason behind is because the volume is high, meaning the liquidity is the highest and easy for you to buy and sell. Now, the question will be, can you trade November or not? The answer is definitely yes. For example, if today is October 8th of October. If you believe that when you buy or sell, you are going to hold for, let's say, until end of November, because your view is until end of November, the market will be bearish. So what can you do right now is, even today is 8th of October, you can start by selling November contract months. So what you need to do is you can hold from today, 8th of October, until 30th of November. Then only you close your contract. So any months or whichever months you can buy or sell, you can hold it for 1 second. You can hold it for 1 month. You can hold it for 1 day, or even you can hold it for 1 hour. For example, if today I decided to buy, I can sell it at next second. If today I bought, I can hold for 1 month. Subsequently, when the market go higher, then I sold it. If today I bought, I even can hold for 2 months. So it's up to you. There's no limitation in terms of the holding period. You can hold for 1 second, 1 day, 1 hour, 1 month, or 2 months. It's okay. But normally, as a retail investor, I repeat, you'll be buying or selling spot month, which is the current month, which is October in this example, because the liquidity is the highest. Second, it's easier for you to forecast. Now, for example, if today is 1st of November, I'm going to test you. If today is 1st of November, which contract months is available for you to trade? I give you 10 seconds to think about it. Remember, if you read back your contract specification, contract months available is spot month, the next month, and the next 2 calendar quarterly months. Calendar quarterly month is March, June, September, and December. So if we assume that today is 1st of November, what are the 4 contract months available for you to trade? So in this case, 1st of November, your spot month will be what? November. Next month will be December. The 2 quarter follow quarter will be March and June. So some of you already answered it correctly. So this will be the answer. If today is 1st of November, the contract months available for you to trade will be November, December, the following month, and the 2 quarter month, which is March 2019 and June 2019. And again, which month for you to trade as a retail investor? Normally, people will be trading November, which is the spot month. Now, come to session 3, margin calculation. Many of you might not heard about this word before. That means what is margin? As a layman term is deposit. I repeat, as a layman terms is deposit. Now, when it comes to margin, we separate into two. One is initial margin and one is variation margin. For today's webinar purposes, we will only look at initial margin. Now, initial margin, what does it mean? If you look at the English term itself, initial meaning what? Initial meaning first. It's like the initial part, the first part. So initial margin meaning is the first deposit that you put in, or the initial margin required by the respective broking house. So in this case, the deposit required. Now, for example, in Malaysia right now, each contract that you want to trade for FKLI, the initial margin required by Bursa Malaysia is 4,000. I repeat, each contract that if you are going to trade for FKLI, each contract, the initial margin required will be Ringgit Malaysia, 4,000. And if you're trading FCPO, will be 4,500 and FM70 will be 800. Now, when it comes to FCPO, I will discuss in details during the next webinar. So today our focus will be on FKLI. Now, this initial margin will change according to the market condition. For example, if the market is very volatile, Bursa Malaysia Clearing House might increase the margin required. I repeat, if the market is very volatile, Bursa Malaysia Clearing House might increase the margin required. For example, prior to the general election, the FKI margin is being requested to be higher. I can't recall at this moment what would be the margin required. I remember it's maybe somewhere about 5,000 plus instead of 4,000. Second, for example, if there are long holidays, let's say, for example, Raya, we have Thursday, Friday, Saturday, Sunday. If there's a long holiday, the margin might be increased by Bursa Malaysia Clearing House as well. But normally, if under normal circumstances, Bursa Malaysia Clearing House will just remain the margin. So right now, FKR margin will be 4,000. It has been quite sometimes they did not increase or reduce. So meaning every contract that you want to trade, you need to deposit of 4,000 before you can trade each FKRI contract. Now, I give you an example. Let's say you are going to invest a capital worth Ringgit Malaysia 50,000. I give you 30 seconds to do a calculation. If every contract of FKI is worth 4,000, if you have a capital of 50,000, how many contracts can you trade? I give you 30 seconds. Please calculate. If you know the answer, you can type into the answer or the chat box.
So the question is that when you have 50,000 capital, so you want to trade FKLI only, so how many contracts you can trade, right? That's the question.
Yes.
Okay, so some people put in like 10, 12, we got a few 12.
Well, we have many answers.
Yep.
So exactly the answer will be what? How come? The answer will be 12 contracts. So for those who answer it correctly, congratulations. How do you do the calculation? You just take 50,000 divided by 4,000, which will be 12 contracts. Now, for those who, if you cannot understand what is this example about, I'll give you a very layman example. For example, if today you have Ringgit Malaysia $10, you go to buy one nasi lemak. Let's say if the nasi lemak costs you Ringgit Malaysia 2, So if every pack of nasi lemak costs you ringgit Malaysia 2, how many nasi lemak can you buy with ringgit Malaysia $10? It's exactly the same concept. So what do is you take ringgit Malaysia $10 divided by ringgit Malaysia 2, meaning you can buy 5 packs of nasi lemak. So if today you are being allocated 50,000 of capital, or you decided to invest 50,000 of initial capital, if every contract costs you 4,000, how many contracts can you trade? The most you can trade 12 contracts. So if you want to trade 12 contracts, in the other way around to mention about it is, if you want to trade 12 contracts of FKLI, you need to deposit or bank in 50,000 to your trading account. Now, session 4 is about users of FKLI, meaning those players in the industry. Who are they? You need to more or less understand who is your competitors, because you are going to win against them. So you need to know who are your competitors. Now, these are the main 3 categories of users of FKLI. I repeat, these are the 3 main categories of users of FKLI. Now, please do not try to start to read all the wordings that are written here. I will explain to you in a simplest way. Even you finish reading it, you might not understand. So you don't need to start to read those wording. Those wording are for those who wanted to understand exactly what is this. And I will explain to you in the layman terms in a short while. Now, first, hedger. What is hedger? Hedger is like what we are trying to say is you are hedging your stocks. For example, in this case, if you are hedging your stocks, you are like buying an insurance. You're protecting your stocks. Now, I give you an example. What is this hedging about? Who are they? If they are hedgers, what are they doing? Now, if they are hedger, meaning they are hedging against their stocks portfolio. For example, let's say I ask you a very simple question. If FBM KLCI is going higher, I repeat, if FBM KLCI is expected to go higher, so if FBM KLCI is moving towards north, so what would be the direction of FKLI? I give you 10 seconds, think about it. If FBM KLCI is an uptrend, what would be your FKLI? And why? Now, if your KLCI is moving higher, you are expecting your FKLI to be higher as well. Why? Because FKLI is a derivative product of KLCI. So it will reflect, more or less, it will be reflecting how the underlying is moving. So if your KLCI is moving higher, your FKLI is expected to move higher as well. Now, for example, if your FBM KLCI is moving lower, it retraces. So what will be the direction of your FKLI? Your FKLI will be moving lower as well. Now, in this case, if your KLCI is dropping, you can't make money. Technically, you can't make money, provided you are doing intraday short selling, which is only restricted to 200 over stocks in Malaysia. So if you are a retail investor, you can do intraday short selling. You can only make, technically, you can only make a day of profit in your stocks. Now, what can you do is, if you're holding your stocks, let's say your stock portfolio dropped by 2,000, that means you suffered a loss of 2,000 in your stocks because you are buying your stocks. So when the market starts to drop, you are losing money. But what you can do is you start by selling your FKLI. Stocks, it disallows you for doing short selling, but FKLI, they allows you to do selling. That means you can start by shorting the FKLI. Eventually, when the market drops, and you can buy back at a lower level. So in this case, your KLCI, if your stock's losing 2,000, what can you do is you sell your FKLI, and let's say, for example, when you short your FKLI, eventually when you bought back, you make a 2,000 of profit. So indirectly, you're buying insurance against your stocks. So hedging is very important if you're holding stocks. When the market starts to drop, what you need to do is you need to start to hedge against your stock portfolio. So that's why I always tell people, if today you really like stocks and you are so passionate about your stocks and you like your stocks so much, you really need to understand what is futures, because futures will allow you to hedge against your stock portfolio. So this is one of the industry players. They are hedgers. They will hedge against their stocks. Now, the second category is speculators. Now, lucky or not, you and me, we are all retail investors. As a retail investor, we are categorized as a speculators. Speculators is very simple. If you are forecasting or you are expecting the market to go higher, or the market is an uptrend or is a bullish, then you long an FKLI. If you are expecting the market to be a downtrend or is a bearish trend, what do? You just sell your FKLI. So second explanation or second categories of the user is like you and us, all the retail investor or some of the institutional or corporate traders. Now, the third category is called arbitrager. To many of you, you might find that these terms is a bit difficult and you never heard it before. Now, you don't start to read the wording. Arbitrager is very simple. In these terms, there's one very important keywords we call it as riskless profit. Now, I repeat, in these particular categories, there's very important keywords called riskless profit. If you cannot understand this all user, don't worry about it. Sooner or later, once you're in the market, you will know. Now, arbitrager, I give you a very simple explanation or a simple layman example. For example, imagine, every one of you, please imagine. Let's say, for example, if one iPhone, let's say iPhone 10, right now selling in US, it costs you, for example, if you convert everything, included your delivery cost, every iPhone in US, they are selling you at Ringgit Malaysia 5,000, for example. Now, if in Malaysia, if this iPhone included all the cost, delivery cost, conversion rate, everything, but in Malaysia, each iPhone is only selling at Ringgit Malaysia 4,000. So what should you do? In this case, what should you do? I repeat, if a similar iPhone 10 selling in US, you converted everything and you consider everything similar and you included all the delivery costs, etc. In US, they are selling each iPhone at Ringgit Malaysia 5,000. But in Malaysia, each iPhone only costs you 4,000. So what would you do? You definitely will buy in Malaysia and you start to sell in US. Then you make the difference of 1,000. This 1,000 is what we call as a riskless profit. That means there's no risk for you to take this profit. So arbitrager will come in when they find that there's any difference in price, especially different markets or different products or the futures compared to the underlying, the price that is the difference, they will come in. So I hope that you will understand, but I repeat, these users of FKLI, if you still cannot understand, don't worry. This is a bit tough for beginners. You just need to know, once you start your trading in FKLI, sooner or later you will understand. But I repeat, these three types of users, first is hedger. Hedger is mainly to protect. They are like buying insurance. Is speculators. Speculators is a pure market view, like for example, bullish you buy, bearish you sell. Arbitrager, mainly they are taking a riskless profit. Now I'm going to show you the resources of futures information. Where can you get it? Now I'm going to show you through slides. Subsequently, I'm going to log into the actual Bursa marketplace and show it to you. How can you do your simulation, or how can you get all the information about futures? Now, for those who are online right now, you can type in bursamarketplace.com. Some of you might already have an account. If you do not have, what you need to do is you just type in bursamarketplace.com and you start to click on this login or register. Now, for those who already have account, you can directly log in, because the majority of you, I believe you already have an account for your stock trading. But if you do not have for your futures, don't worry. The similar login, you can do stocks and futures. I'm going to show it to you in a short while. For those who do not have bursamarketplace.com accounts, you just need to register. Now, I do not have times to wait for you to do the registration. For those who do not have, later you can register. For those who have, you can log in. Now, for those who do not have, what you need to do is once you click you type in bursamarketplace.com, I repeat, you just need to click at this button, register, and it will link you to this. And what you need to do is you start to click register. You can register via Facebook, you can register via Twitter, you can register via Google+, or you can just purely register via a new email and password. So for those who do not yet register, you can register later stage. For those who already register, you can follow me through. What you need to do is, if you never trade futures before and you want to start by trading futures, or you want to understand more about futures, what you can do is you can go through this simulation platform. I repeat, in Malaysia, unlike foreign brokers, many of them, they do have a virtual trading account for you to start. For example, they give you 100,000 of virtual cash. You can start to trade to understand the particular products. But in Malaysia environment, none of the brokers do have this virtual trading environment. So what you can do is you can go through this Bursa marketplace to experience exactly how to buy and sell a futures contract. So this is the platform for you to learn. So this platform we call it as FTP, is like your simulation trading platform. So first, once you log into Bursa marketplace, you click something like a briefcase. Then once you click it, when it drop down, you select futures. Now, I will repeat in a short while. I will show you exactly how do you do that. So once you click the briefcase, the drop down futures, and how do you add your position? What you need to do is you just need click add futures contract, and you can start to buy and sell. Now, once you click add position, futures position, they will show you this screen. So you can start to buy or sell a FKLI contracts. Now, I show it to you how exactly it works. For example, in my case, this is Bursa Marketplace. So I start to log in. I log in using my own account. You can log in by using your own account. It doesn't matter whether you are using, previously you're using for your stocks. It will be the same account. Oh, sorry, I think my password is wrong. No, so once I log in, again, I show it to you. What you need to do is you just need to click on this briefcase, then you click on futures. So once I click on these futures, so this is my portfolio for futures only, because normally I will use this platform to show it to people, how do you do your futures. So this is my profit, everything, but I'll go through with you in a short while. If you're first time logging into this platform, the first step you need to do is you need to click at this create futures trading plan. I repeat, the first thing what you need to do is you click at this create futures trading plan. What you need to do is you just type in a name. For example, your own name, or you just want to type in FKLI or FCPO. This one is for your own reference. And if you need to do your description, you just type in your description by yourself. For example, this one is only for day trading or overnight trading. It's up to you. Once you already finish this all, what you need to do is you just click create plan. This is for first time user. That means you never do any futures trading before. So I repeat, once you log into your account, you click this briefcase and you click futures. Then once you click on futures, you come to this. What you need to do is you click on create futures trading plan. So once you click on this, you just type in whatever plan that you want, then you are done. That's the first step. Now, second steps is the steps that you are going to start with your buying and selling of futures. How do you buy and sell is, can you see once you click this create futures trading plan at the bottom, Can you see this? This is add futures contract. Now, to buy or sell one futures contract, what you need to do is you click on this, add futures contract. So this is exactly like your order ticket. Now, first step, you select a contract. Can you see that there are many contracts that you can select, from FCPO to FGLD to FKLI to FM70. Now, for today's purposes, I will only show you FKLI. For today's class is related to FKLI, I will only show you FKLI. When it comes to the next webinar will be FCPO, I'll show you how to do your FCPO. For example, FKLI, can you see that the contract months available is only October, November, December, and March. These are the 4 contract months that you can choose. Now, for me, if today is only 11th of October, I will definitely choose spot month to trade. So what I do is I choose FKLI October. Now the question, I repeat just now, I already mentioned during the first half, can I choose FKLI November or not? Yes. If you foresee that you are going to hold for, let's say, 2 months until end of November, you can start to select November month. It's okay. Don't worry about it. So in my case, I believe that I will select October because I will hold for a shorter period. So I click October. I repeat, I click FKLI October. Now, for these platform purposes, you cannot select price. They will force you to take the market price directly. So tomorrow, if you log into this platform, they will follow exactly the live trading prices. I repeat, they'll follow exactly the live trading prices. So you can only go according to the price. Like for example, today FKLI closed at the price of 1706. Currently market already closed. So what I can do is I just follow this. I cannot select the price anymore. So what I do is I just need to take this 1706. Now, can you see you have 2 positions to select, either short or long? How to select short or long? First question. How many of you believe from today until the end of this month, the market is expected to go higher? If you expect the market to go higher, you just type into the chat box. Now, for those who believe that the market is going to go higher, what should you do? You select long. I repeat, if you are expecting the market to go higher from today onwards, you select long. Now, if you expect the market to go lower, let's say today, market is quite bearish. Yesterday, the market is quite bearish as well, plus today, the market is quite bearish. If you believe the market will continue to drop, what you need to do is you will select short. So based on you, I repeat, if you expect the market to go higher, so what you need to do is you click long. If you yourself believe that market will go lower, what you need to do is you click short. Now, once you click this all, stop and target price, I'm not going to cover because it's not within our scope for today's session. So once you finish with that, at the bottom, can you see this save plus close? Once you click save plus close, meaning you already submitted the order. So once you submitted this order, can you see here? It exactly show in my portfolio. This is the contract that just now I submitted, FKLI. I submitted October contracts. My position is a short position. I did not long. I selected a short because I expect the market to go further lower. So I short. So those who expect the market to go further higher, what you need to do is you long. So this is the date that I shorted. So today is 11th of October, I shorted at the price of 1706. Now, once tomorrow the market start to open, here they will auto calculate your profit and loss. They'll auto calculate the profit and loss based on the current market price. You don't need to calculate by yourself. You just need to understand. Now, I give you a previous example, which I already do. Now, for us, we normally don't use this platform to trade because we trade the actual market. This is for demo purposes. Now, for example, in this case, can you see this, the first line? FKR July. I bought the July contract months. I shorted on 24th of July at the price of 1759.5. But eventually, can you see this? the market last traded at 1772. So how this negative 625 is being incurred is you take 1772 minus 1759.5, which is what? Which is 12.5 points. You take 12.5 points times Ringgit Malaysia 50. So I have a negative 625 of loss. Now, can you see the next example? I actually short a June contract at the price of 1692. Eventually, the market dropped to 1666.5. So I make a profit of 1275. Because I sell high 1692, I close at 1666.5. I have a profit of 1275, which is a difference of 1692 and 1666.5. So this is how you do. So I repeat, it's very simple. When you want to buy or sell, you just need to click Add Futures Contract. Then you start to select the contract months that you wanted to do. For example, FCPO or FKLI or FM70. Then once you selected, what you need to do is you select buy or sell. Then at the bottom, you just need to click Save plus Close. You already buy. Now, eventually, how do you close a position is, can you see this open? What you need to do is you just click on this open and they ask you, are you sure you want to close this contract? Once you close this contract, it will be sent to close. So let's say, for example, I confirm I want to close, then I just click Close Contracts. So once I click the Close button, can you see I already do not have any pending orders? This contract already closed. Can you see this? First line already closed. I do not have any profit and loss because I buy and sell at the same price. So I do not have any profit and loss. Very simple. So for those who are having a Bursa Marketplace account, you can use this to test on the futures trading. This, they follow the actual live prices and you can test it out. You can trade as much as you can before you actually trade in the actual market. So this is where you can do. Now, walking through this platform, I can still show you some of it. Now, this is your profit and loss. Can you see this 61,000? Now, to you, maybe this is very high, but to us, this is not our actual trading platform. I always use it to show people. And normally, if I forget to close, they will auto settle at the end of the month. So this entitled me for 61,000. You can test it out. Maybe you can do even better than me, especially when recent market is a one-way direction. So some of you, if you want to test it out, you can test it out on your trading platform, and this is all you can do. You can trade FKLI, you can trade FCPO. So for those who want to understand FCPO, you can join the session for webinar 3, and through this platform, you can learn many things. Even you can follow the opinion leader, and you can get all the research report by respective broking houses as well. So this is where you can go. Now, I'm going to do a summary about this platform. I just repeat. First thing, what you need to do is you log in to bursamarketplace.com. Then for those who know it, register, you just need to register. Once you register, you go to this briefcase and you select futures. Once you selected your futures, for you to buy and sell, you just need to click Add Futures Contracts. Once you added, you can decide to buy or to sell a futures contracts. Once this is all done, how to monitor? This is your P&L, and this is all your position, whether is it open or close. And for you to close a contract, what do you need to do is you just need to click on this open position, and once you click on it, they will ask you whether you confirm you want to close. If you confirm you want to close, you just need to click on the close contract and your contract already closed. Now, if you cannot understand what I'm trying to go through just now for the FTP, or you want to understand in details, what you can do is you can download the FTP guide. You just need to click at this, or what you need to do right now is you screenshot and you can download this user guide and you can start to do your own trading. You can test it out exactly. Whatever I covered during just now for your theory or practical part, you can exactly exercise it. So subsequently, when you join the third webinar, which is FCPO, you will understand better. Now, just want to repeat for those who did not attend previous session, this is the workshop for you to attend. This is all organized by Bursa Malaysia Berhad. For those who want to learn more about futures and option, you can join this all workshop. For you to register, you just need to click on this URL, or you can scan this QR code. If you're a mobile phone, you can scan this QR code, or you can just screenshot first. You screenshot, later you can register by yourself. I'll give you an example. Upcoming futures workshop series that organized by Bursa Malaysia. This is a 2 days event, and the good news is this 2 days event is fully sponsored by Bursa Malaysia Berhad. There's no cost for you to attend, but once you register, you must attend. Two topics is, first topic is getting started in futures trading, and we are going to cover the futures trading plan. That means these topics is not easy for you to find. Google search, you cannot find. It's not so easy. And futures trading plan is very important when it comes to trading. You need to plan first. And how do you plan? We will let you know. We will guide you through step by step. How do you do or set up your futures trading plan? And the second workshop, it is on risk management in futures trading. As you know, futures trading, to many of you, you will find it is a very high risk product, but can those risks be managed or not? You know that it's high risk, but these all risks actually can be managed. And do you know how to manage or not? We are going to teach you how to manage your futures risk. First, by identifying the risk involved. Now, this series of futures workshop is going to organize at Samdabi Convention Center in KL. This is going to be conducted in English. On 27th of October, it is a Sunday from 9:30 to 4:30. And on 20th of November, it is on Tuesday. Now, many of you might be hesitating, why Tuesday? Don't worry about it. 20th of November is a public holiday. So for those who want to register, we hope that the priority will be given for those who can attend both days. I repeat, if you want to register, priority will be given for those who can attend both days, 27th of October and 20th of November. Now, how do you register? The same, just now, the URL that you access, you can click into it. There are certain course or workshop that you can attend. Select the one that you want to attend, you just register accordingly. Now, for your information, this workshop, you cannot find any place. That means you cannot register at this moment, not even through Bursa Marketplace at this moment, because it is closed to those selected participants only. So if you want to register before they open for public, please register as soon as possible. If not, it's very difficult for you to register because we only send out to priority for those who can register. And right now, already more than half of the class already fully filled. Now, the rest of the workshop, if you are coming from respective state, like for example, you are in Ipoh, there's an English 3 days class. If you're in JB, there's a Mandarin 3 days futures workshop. For those who want to understand option, there are option workshop available for you as well in KL, Penang, JB for both language, English and Mandarin. You can follow the dates that you want. You just register via this URL, bit.ly/bmdaxc18. Now, again, for those who not yet screenshot, this is last chance for you to screenshot for the registration link, or you can type in your you can scan this QR code and it auto links to the registration page. Available for all from September to December, all the futures and option workshop. Now, this comes to the end for my presentation. I'm sorry, I'm running out of 5 minutes. And my quote is successful trading starts with good trading habits, because I always believe trading habit is very important. There's a reason why KLCI and Bursa Malaysia Derivatives, they are organizing these events, because they want you to learn something that is correct. So when you kickstart your futures trading, you start with something that is correct. Now, for those who want to follow me, please follow me through my Facebook. This is my account. Please do not send me any friend requests. If you have any questions subsequently, you dare not ask me openly, you can send a message via Facebook or ask me. or you want to follow all the workshop, to get all the information on the workshop, you can follow me through my Facebook. This is my Facebook. So this comes to the end of my presentation. I'm going to pass it back to Casey. Thank you very much.
Yeah, thank you, Ting Ting, for explaining all the things in very detailed form, and also do the demonstration on a Bursa marketplace. So I think that's a very good platform that everyone can just try it out and understand how this works before you actually put down your money and trade the real stuff. So let's do some Q&A session. It will be, maybe we can do like 20 minutes. So for you,
sure.
If you have questions, you can just type in the Q&A box. No, don't use the chat box because it's easier to monitor for us in the Q&A box. So let's get started with the first question from Hock Heng. He's asking, how come FKLI move at 8:45 a.m. when KLCI only starts at 9 a.m.?
Oh, this is a very good question. Now, FKLI, as per previous, I tried to explain, if you follow the contract specification, FKLI will start to trade at 8:45, which is 15 minutes before the market open, which is your underlying. Your KLCI open at 9 o'clock, but we start at 8:45, 15 minutes earlier, and the market also closed 15 minutes later. And the end of the day, stock market closed at 5 o'clock. We also closed at 5:15. One of the reasons why our market opened earlier and closed later is because of hedging purposes. As per the previous last two slides that I tried to explain to you, they are trying to hedge. They allow you to hedge. Derivative mainly for you to use it as a hedging tools. So we open 15 minutes earlier and close 15 minutes later. But the question is, how can you trade when the stock market only open at 9 o'clock? So one of the reasons is because of the, let's say, for example, while you're sleeping tonight, or our market is not opening, but other markets, they are opening. Let's say Dow Jones, etc., they are opening. So like, for example, yesterday's scenarios, if you understand, yesterday Dow Jones dropped by 800 over points. So what can you do? If today you understand futures, there's another advantage for you because stock market will open at 9 o'clock. If you understand futures, by the time of 8:45, you already managed to gauge where exactly will the KLCI open at 9 o'clock. So this is an advantage when you know additional one products. So 8:45 futures will open first. So by the time you start your stocks trading at 9 o'clock, actually for us as the futures traders, we already know roughly where KLCI will open. Now, at the time 8:45, when the market open at 8:45, majority of them, they will be hedging against the stocks because they are anticipating our stocks will be trading lower as well. So there's a reason why they need to open 15 minutes earlier. One of the reasons is for hedging purposes. So if 8:45, when the market open, mainly hedgers will come in and start to trade first. If you are speculators, you can also start to trade because you can follow overnight Dow Jones to anticipate or forecast what will be happening when the KLCI open. So in summary, we'll start to trade at 8:45. It doesn't mean that we need to follow KLCI. It can be our forecast based on overnight Dow Jones, or we are only doing a hedging. We are hedging against our stocks.
Okay. Yeah, very good answer. So before we get to the second questions, just a short announcement here that if you want to have the slides of this presentation, if you want to have the entire slides, we are going to put up on our survey page where tomorrow you are going to receive an email from me asking you to take a survey. So it's a very short survey, so you can get it done in just I think 2-3 minutes, then it's done. And at the last page of the survey, you have the link to download the slide for this session. So just help us give us some feedback, and then you can download the slides also. Okay, next question is by Porky. Porky Yi, right? Buy sell through the same CDS account which I have for normal stock, right? Is it, how do we buy sell? So I think he missed the first session, I guess.
Oh, CDS account is for your stocks. If you are going to buy and sell futures, you need to open another trading account. Stocks and futures, there are two different trading accounts.
So is it called futures account?
Sort of. in our industry, general terms we do not have, but what you mentioned is correct also, or what we call it as futures trading account. Now, futures trading, they do not have a CDS, unlike stocks. So there's no CDS account. So what you need to do is like what just now you mentioned, maybe we call it as a futures trading account. So you need to own a futures trading account before you can buy and sell a futures.
Okay. John is asking, I assume the calculation for the profit and loss did not include the fee and commission.
Yes.
So what are the fee and commission like? Like normally how many percentage?
Oh, okay. The fees and commission for futures, we don't calculate based on percentage. Now, for fees and commission, it is based on absolute figures. Now, absolute figures meaning that when you approach any of the brokers, they will charge you exactly a figures. Like for example, every contract they tell you, if you buy one FKLI, it doesn't matter you buy at 1,007 or 1,008 or at the index points of 1,009. The fees is fixed. For example, they let you know, every contract FKL you want to buy, you need to pay 20. This Ringgit Malaysia 20 included your exchange fees, clearing fees, and the commission. The exchange fees is towards Bursa Malaysia, and the clearing fees is towards Bursa Malaysia Clearing House, and the brokerage is for the brokers itself. So this normally, if you approach any brokers, they will, when they give you a commission rate, it included these three section or these three areas, and it is an absolute figures. So for example, in the industry, on average is per contract is Ringgit Malaysia 20 to Ringgit Malaysia 25. So every time when you buy one FKLI, you pay 25. When you sell, you pay another 25. So when you buy and sell, you pay total Ringgit Malaysia 50. So for Malaysia, normally every product by one tick, meaning by every movement, you can cover your cost already. Unlike stocks, majority of the time, it's very difficult for you to cover your cost by one tick itself. But for futures, by one tick, you can cover all your costs. And the cost is all absolute figures. I repeat, it is unlike your stocks, is by percentage. It is an absolute figures. That means when they quoted you, they will quote you by, like for example, Ringgit Malaysia 20 or Ringgit Malaysia 25. When you buy, it doesn't matter you buy at 1700 or 1704, you still pay 25. And when you sell it, for example, at 1,008, you also pay 25. So all the example just now are gross profit. Subsequently, you need to minus your commission, then it will become a net profit.
Great. So generally, the fee is flat, so it's fixed, and then as you say, just one tick will cover the cost already.
Yes.
Okay, awesome. And any difference if we trade at the beginning of the spot month versus the end of the spot month? So, for example, early October or versus like end of October, is there any difference if we trade on the spot month?
I try to understand this question now, but generally, if you digest based on this question, meaning that if beginning of the spot month, you see, like when you want to buy a stocks, is there any different if you are buying at the beginning of the month or at the end of the month? If you believe that this is the right time for you to buy, or you believe, for example, after these 2 days, the market dropped so much, you believe that the market will stage a rebound. So if you are anticipating the market to go higher, it doesn't matter today is 11th of October or today is 5th of October, you will still buy. So I do not really understand the exact question that maybe he's trying to ask.
So I think he's concerned about the expiry date, isn't it?
Oh, if you are saying that coming from the pure expiration date, it's the same. For example, if beginning of the month you buy, you can still hold until the end of the month, which is the 31st of October. If you are buying, let's say 29th of October, you can still hold another 2 days. So at the end of the day, even when the contract already expired, there's one part what we call it as rollover. It's like when, let's say, for example, as a layman terms, if today you rented a house, your contracts you sign with the, let's say with the house owner is you sign until 31st of December 2018. But when it comes to 31st of December 2018, you still want to continue to stay. What should you do? you renew the contract. Am I correct?
Yep.
So in futures, it's the same thing. So in futures, you just need to, in a way, what we call it as renew the contract, or in our industry, we call it as rollover. It's like from October month, you're only pushing to November month. Now, for those who cannot understand, don't worry. We definitely have a topics covering about rollover. Meaning, if today already 28th of October, can you directly buy November? Yes. But if you bought October on 28th of October, let's say you hold it until 31st of October. If you do nothing, the contract will auto expire. What you can do is you continue to buy in November. That's it. So it's a very minor things, or what we call it as a minor technical issue. So it doesn't matter whether today is 15th October, you can still buy October month. If today is 28th of October, maybe you can consider, instead of buying October month, you can consider to directly buy November month.
So technically is actually when, let's say, October's contract is ending 31st, so it's going to expire, then you technically just buy another contract for November, right? So you pay for the commission.
You just need to push it to the next month. Then you continue hold your position.
That means you just pay a little bit more of the commission only, the transaction fee. Right?
Yes. Very minimum.
So can be covered by one tick.
Yes.
Okay.
I would say majority of the brokers by one tick should be able to cover.
Okay, good. So next question, if I want to short the future for the next few months, and let's say this month is October, is that right? I sell one December contract and then wait until December to buy it back and sell it?
Oh, you can wait until December to buy back or sell it. For example, today is October. You decided to do December, which is what we call it as a bit of illiquid months. That means those further or furthest month is more illiquid, less people trading. Now, if today is 11th of October and you decided directly to buy December or sell December because you believe that the market is very bearish, you're going to hold for long term. Now, if today you sold December month, do you need to wait until December to close it? No need. Let's say, for example, tomorrow, if the market drop further and you find that you already make enough profit, you want to close it immediately, you can close your December contract months immediately by buying a FKLI December contract months. Then you can close it. It doesn't mean that you need to wait until December to close it. You can close it anytime as you like.
Okay, nice. As long as there are another trader over the side, right? So you can trade whenever.
So long as the buyer and seller, you are able to trade. But normally, even illiquid months, right, the buyer and seller will be there. It's just that sometimes you just need to pay slightly higher, meaning that, for example, the buyer, you are willing to sell at 1,007, but buyer is only willing to buy at, let's say, 1,698. So there's a difference of 2 points. Because the market's not that liquid. So there's a 2 points or 1 point or 3 points of differences. Compared to spot month, normally the differences is by half a point. It's very, very liquid.
I see. Okay, the next questions. They want to know where to trade, right? How about we show them how to find the brokers, the list of brokers on Bursa Malaysia website?
Oh, if you want to trade for the real market, right, where to trade, what you can do is you just need to open your account with the brokers. Once you open your account with your brokers, then they'll provide you with the trading platform. It's like your stocks. Once you open with them, they'll provide you with the trading platform. You just need to log in and you bang in, then you can trade for the real market. Exactly the same. And all the brokers, as per previously, I show it to you. What you need to do is you just go to, let's say, for example, this is your bursamalaysia.com. So you go to brokers and you go to list of trading participants. I repeat, once you go to bursamalaysia.com, you go to brokers, you go to list of trading participants, and you can see these are all the licensed brokers. You can give them a call and you make a decision which brokers you want to open your account. And once you open your account, they provide you with the trading platform. And from there onwards, you can start to do your trading, the actual market trading.
Okay, great. So next question is where do I download the FTP guide? I think the one that you show us right just now. Yeah.
The screen, the previous screen, where can you download it? This is where you can download. For those who know your screenshot just now, you can screenshot this and you can start to download. That means you just need to click on the FTP, the bursamarketplace.com, and you try to search for this icon, learn how to use the futures trading plan with our guide. Then you can start to download.
Okay, so it's at bursamarketplace.com, right?
Yes, if you do not know or you cannot find, at the end of today's session, like just now Casey Lau mentioned to you, what you need to do is you just provide your feedback to him. They will provide you today's webinar slides. I will do a summary of it. I will send it to Casey Lau and he will send it to you for those who give the feedback form. So from there, you can follow the step-by-steps of how to do your FTP.
Okay. Alan wants to know, like, for example, today the market's down a lot, right? And FKLI would also gap down when the market opens at 8:45 a.m. Isn't it correct?
Yes. The market will gap down. If, for example, yesterday, because Dow Jones dropped a lot, that is, I think, the second highest for this year itself. The second highest, which is 800 points, equivalent to 3% plus. So you're expecting our Malaysian market to open a gap down as well.
Gap down like 2-3%, right? Maybe.
Yes, also open gap down. I think open at about 170 something. Then subsequently it retraced further, and before the market closed, they recovered a bit. So it was still open and gap down.
So in this case, most people would like to short the contract, and
yes.
is it easy to find people that will long it so that we
Yes.
can trade?
The market was still very liquid. Even the market is only towards one direction. For example, if you anticipate that this market, let's say the worst scenarios, the market continue to drop 10 days. Many people will believe that the market is a bearish market, but where can you search for the buyers? There will still be many buyers there. You know why? Because one of the reasons behind is because of the holding period. For example, you might be holding short position, but you're holding for 1 month. But I might be buying because I'm only buying for a short term, let's say for 1 hour, because I believe a market gap down already. Market might be rebounding. That's why I will be holding for 1 hour. I will be buying. And you might be shorting for, let's say, for 2 months. I might be buying and holding for only 10 minutes. That's why the market for futures is very liquid. Buy and sell, you can easily get buyer and seller, even the market is only one direction. You will not find any difficulty for that. Because one of the main reasons is because of holding the period, which is different. Certain people only holding for 1 second. Some of them, they're holding for 1 second. Some of them, they're holding for 1 hour only. Some of them, they're holding for 1 day or 1 month, 2 months or 3 months. For us,
or some people might want to close their position already, right?
Yes. So it will create that kind of liquidity in the market.
Yeah. Okay, that makes sense. So when I buy future, the buy price is always the market price at the point I submit the trade, is it?
Depends of the order type that you are using. So it's like your stocks. Now, because the order types, there are many order types, it's very difficult for me to summarize and explain to you. Now, I try to give you a layman's understanding. When you buy your stocks, I think majority of you do not know that actually they have different order types. For example, they have limit orders, they have stop orders, etc. Now, if you're buying limit orders, sometimes you can buy slightly lower. If you want to buy a stocks, does it mean that you need to execute immediately? No. You can, for example, you can buy at lower level. If you believe that the market will drop, you can queue at lower level first. So if the market really drop and hitting your position, then you start to buy. So it doesn't mean that you need to buy immediately at the market price. You can queue to buy at a lower price. It's up to you. It's exactly same as your stocks. If your stocks can queue and buy at a lower level, futures is a similar situation. Now, some of you might ask this question is because just now when I show it to you, the FTP, it forces you to take the market price. But the actual trading platform doesn't work in this way. This is only a simulation trading platform. They only want you to understand because this simulation trading platform, they just want you to experience. That's why they will force you to take the market price.
So the simulation one is just more rigid, but the actual one will be more flexible.
Yes, the actual one will be similar to your stocks. The simulation is slightly different now.
Okay, awesome. So is the KLCI index that you can buy is based on the estimated KLCI that's going to be at 9 a.m. when the market open. So just like today, the market will open much lower than the previous day's close.
Yes, futures, like what I defined during the workshop, the first webinar, futures is like a forecast. That means what is your forecast moving forward? What is your anticipation? It's like, for example, beginning of the year, many of the broking houses already anticipate what will be the KLCI by the end of the year. So this year on average is 1860. That's the market forecast. They will calculate based on many things like PE, etc., the industry, our economy. So sometimes how do you do your futures trading is also based on your forecast. It can be purely based on technical analysis or it can be purely based on fundamental analysis. So it's your forecast towards the market itself that determine whether should you buy or sell.
Okay, good. Another question is about, let's say I buy 5 contract and then I sell 2 contract. So in short, I can sell each contract over different times. So I think the question, do you understand the question here?
I think roughly I can understand.
Okay.
I try to interpret that because I
okay.
think when you type the question, right, you type it very fast. There's so many short form, etc. No, he's trying to say that if I buy 5 contract, can I sell 2 contract or partially sell first, slowly, or should I buy 5 contract? I need to sell 5 contract at once. No, when you buy 5 contract, you can slowly cover your position. For example, you can start to sell 1 contract first, then eventually when the price go higher, then you sell another contract. Then if the price go further higher, you can sell your 3rd contract. If the price continue to go higher, you can sell your 4th contract and eventually your 5th contract. It doesn't mean that when you bought 5, when you sell, you must sell 5 at once. It doesn't mean that. You can slowly sell. Or even another scenario is if today you own a 5 contract, can you directly sell 10 contract or not? Yes. If you today own 5 contract, you sell 10 contract, meaning automatically the 5 contract will close your previous position. And right now you remain with net short 5 contract instead. So it's okay.
Okay, I see. So that means whenever you open a contract, you can close it anytime you want, or you roll over by buying a new contract, right?
Yes.
Okay. So now the next question, I like this one. What's the registration fees to open an account with the broker?
Oh, now futures is unlike stocks. As I mentioned to you, stocks you have CDS account. When you have CDS, the $10 that you need to pay is actually paying to Bursa, which to open your CDS account. Futures, you do not require a CDS account, so you do not pay any fees to open a futures trading account.
Yep, nice. So it's actually practically free, right? No cost for you to open.
It's free of charge. So anyone telling you that, hey, please pay me $10 to open the futures accounts, then that is definitely not the correct way. So you make sure that the person is licensed. So if it is a license in Malaysia, you open any of your futures trading accounts, you do not pay any fees.
Okay, another question. Can we apply technical analysis with futures?
Yes. Definitely, majority of the people in the industry, when they trade futures, they rely more skewed towards technical analysis. Now, that's one of the part when it comes to analysis. We exclude those like trading plan, risk management, or the whole things like when it comes to trading plans, there's many subcategories. But if purely coming from analysis, I would say that majority of the traders will skew towards technical over fundamental, provided if there's any news or any fundamentals happens in the market. If not, if like normal days, right, there's no news or no fundamentals, they'll follow technical analysis more.
Okay, I don't understand this question, but maybe you do. Is there any partial match concept in futures like stocks?
Yes. For example, partially match, meaning that, for example, you put in 5 contracts to buy. Let's say you buy at 1,007. You want to buy at 1,007, 5 contract. But let's say if you put this contract, for example, at 1,007, but the market drop and touches 1,007 exactly, and maybe there's only 2 sellers wanted to sell it at 1,007, but you have 5 contracts. So your 2 contracts will match, remaining 3 contracts will be queuing. If the market subsequently rebounded all the way, meaning your remaining 3 contracts will never match. So this is what we call as partially matched. So in futures, it's the same thing. If you queue on orders, there's a possibility it will be a partial match, like your stocks.
I see. So is it possible for students to open a futures trading account?
In Malaysia, if I'm not mistaken, above 18 years old, you can open. Yes, if you're students, so long as you're above 18 years old, legally, you can open a futures trading account. That's why previously I do have a graduate at the age of 18, he attended my class. That's why that's the first time I encountered, because majority of it is 21 years old. But once I check, I understand that it's 18 years old. In Malaysia, once you're 18 years old, you can open a futures trading account. So if even you are a student, there's no issue for you to open a trading account.
Okay, we have another question on Facebook. May I know, is it like have a margin call for trading future?
Margin call. Now, just now, when it comes to the margin, there's 2 parts. If you all can still remember or not, if you look at the slide, when it comes to margin, you have two types. One is initial margin, one is variation margin, which I already mentioned that I will not cover because of today's context. Today, you just need to understand initial margin. But this variation margin is a margin call. Margin call meaning, I just try to explain to those who can understand. If you cannot understand, don't worry. Subsequent topics we are going to cover about variation margin. Now, variation margin is exactly like what we call as margin call. Now, the word call is definitely not so nice. Meaning, if you have shortage of margin, they will give you a margin call. So if there's any margin call, meaning that you do not have sufficient margin compared to the margin required. Simple to say is the deposit required, for example, is 4,000. If the market against you and your account only left with 3,000, you have a margin call of 1,000. So don't worry, during webinar 3, I will cover about this variation margin, what we call as margin call. Yes, the answer is you will have a margin call. I will cover during webinar 3.
Okay, great. Great, thanks. We actually covered all the questions today. So thank you so much for being here and show us all this awesome information and also demonstration of the Bursa marketplace. So for everyone, you can always go and try it out. So thank you, everyone. Stay tuned for my email announcement of the next upcoming training session about crude palm oil futures, which is the short form we call FCPO. And once again, this webinar is an educational initiative brought to you by Bursa Malaysia Derivatives Berhad. So you have a good night. Thanks, Ting Ting. You have a good night too.
Thanks, everyone. And thanks, Casey, for that.
Thank you. You guys have a good night.
Okay.
Yeah, so this is this webinar is an educational initiative brought to you by Bursa Malaysia Derivatives Berhad. So everyone have a good night. Bye-bye.
Bye-bye.